Isaac, welcome to Living Off Rentals.
Hi, Kirby. How are you?
Great, great. It's an honor to have you here. I am really impressed with all that you've accomplished over the years in real estate in general. And we're specifically having this conversation to talk a little bit more about short-term rentals, even though we were talking a little bit before this, and there's so much that has led up to the success that you've had recently in short-term rentals, and we're going to get into all of that. But you're a part of the first vacation rental investment blueprint program that we're doing, and I'm just like blown away by your first couple of deals here. You kind of did two of them simultaneously, and I wanted to do this episode to share what's possible, even though this isn't common. I don't want people to think like this is just the standard everyday deal that you'll come across as a short-term rental, but it is possible if you take the right steps. And that's why I wanted to have you on here to kind of share how you've put these deals together and what's gone into it. And, they've created basically kind of a year's salary worth of equity and thousands in cash flow per month, which is just phenomenal for one fairly affordable or, per property for fairly affordable properties that, are used as vacation rentals. So before we get all into that though, I think people only think I have people with accents on this show because I just had Mark Wilton on, who's from New Zealand. But if you can share a little bit about where you're from originally and your background and how you kind of transition into real estate.
Sure. Well, first, thank you for having me, Kirby. I'm really excited to be on your show, especially now that I had just a couple of months back, I had Kiyosaki warm up for me.
That's right.
Yeah.
I'm sure you'll upstage him here.
Absolutely. So a little bit about me. I was born in Bulgaria and I moved to United States when I was about 24, 25. Had the entrepreneurial spirit from early age. My parents are entrepreneurs. I tried and had a variety of businesses. The first one I started when I was around 11, much smaller scale, but kind of the typical sales businesses. And when I came to the United States, within maybe the first year, I realized that the way to go for me here will be through selling real estate. So I took the license and I started in a commercial real estate firm where initially I was trying to sell commercial condos. They were not that popular back in the days on the Chicago market. They were just about starting. This is maybe around 2005. So it's been quite some time since then. And I was young, energetic. I felt like I can make a lot of money very, very quick. So I'm like, okay, real estate it is. Little did I know, it was not that simple for me. Maybe other people find success very quickly. I was not one of those. Thinking that because I was successful in Europe at an early age with different businesses, that I can duplicate this very, very quickly here.
Well, timing of 2005 probably didn't play in your favor either.
That is correct. More like 2006 is when we started seeing the first big problems.
Yeah.
But, honestly, I put more than 40 hours a week in that business. I was probably doing about 60 hours a week. And in my whole entire first year, I made $3,000. I had to have another full-time job. So I was putting something like 100 hours a week just to kind of make it there.
You figure out how much that was per hour that year? Get real depressed?
Yeah, I don't want to go into the cents and the nickels. Let's kind of leave that for someone else. My second year, I was ready to kind of make it even more. I was really hustling. So I was canvassing like crazy, cold calling and all that. In my second year, I improved my track record. I made $7,000. Nice. And that's more than full time. And, this is where perseverance comes into place. And this is where you have to pay your dues to kind of make it happen. And of course, you doubt yourself and you start thinking, is this good for me? Should I stay in that business? Should I not? But I really believe that one of the reasons why I didn't make it faster was I didn't have the proper coaching and I didn't go through the proper programs. So I kind of had to learn it by trial and error. And um, in my third year, I transitioned into residential rentals, which was very, very different. I had a few friends that asked me to help them find a place. Um, Commercial real estate was way more complicated. So for me, the residential deals were simple. And then I transitioned into residential rentals when the market was melting. No one was really chasing those deals. So I guess I had a thing for them. I became top producer by the second month. And I started popping tens of those. And little by little, I realized that while everybody else was chasing still sales that were not happening, I was killing it with rentals. And as Tony Robbins says, it's all about timing. So different strategies can take you to different places, but it's all about timing. Within a few years, I transitioned into residential sales, and then I went into investment properties. So now 17 years later, I've closed maybe about 800 real estate transactions. But my first 2 years, I probably had 2 deals for the whole 2 years. So yeah, if your listeners and if they want to make it in the real estate business, I would just encourage them to try and get more education and just to stick with it. If you stick with it long enough, you'll learn what you have to learn and you can do really, really well. So from residential rentals and residential transactions, I went into investment properties. And for a while, I was flipping properties with a partner, who's my best friend. You know him.
Yeah.
Well, so
he's been on the show before. Boyan Sala?
Yeah. Yep. Heads up to him. So we did about 50 together within a couple of years. And then little by little, I realized that, flips are great and you can make good money with them. The problem is that it's really not a business, it's a job. You have to find the next one and you have to find the next one. And the real estate business is cyclical. So there are cycles where you can find a ton of properties and rehab them and flip them. And then it gets more difficult and then the margins get thinner. But even if the margins are great, you have to continually stay in the rat race. You have to continually just finding the deal, working the deal, financing the deal, then rehabbing the property, then selling it. The full cycle, even if you do it very, very quickly, still takes 4 or 5 months. And then you got to do it again and again and again. And even if you're doing it across multiple properties, you're not getting wealthy. You're just being paid very well. So you're not having a money machine, so to speak. And I realized that changes have to be made. Went into long-term rentals. We sat down with my wife. Long-term rentals, I think about 3 years ago. Okay. And I think that we went into the rentals as landlords very, very late in the game because my biggest obstacle was my mentality of being a real estate broker. Because as a real estate broker or even as a flipper, it's transactional. You like that in, out, you make a big fat check at the end and off to the next one. You don't have equity, you don't have money into it. So very little risk, very high reward. It's only sweat equity that you're kind of putting into those. And for a very, very long time, I like that. And then when you pop in 50 to 80 deals a year, you can do really well. The problem is that you have to continually, perpetually do that, and we went aggressively with my wife, probably about 3.5 years going to rentals. And I kind of believe that we kind of caught the last train, the last car of the last train when it comes to still buying them at a reasonable price where they can cash flow well. So we bought multiple units, different areas. And being a landlord, if you do things right, can be great. We realized one particular strategy over almost all other strategies that is extremely important. And this is where my construction background came into play. Every single time we buy a rental property, whether it's a long-term or now short-term, we believe in completely remodeling the place. We kind of go all the way down to changing plumbing, electric, HVAC, unless, of course, if the property is in good shape, so we don't have to do all that. But this way, we eliminate a lot of the management and a lot of the upkeep afterwards. And it costs us a fraction of the cost to do it up front versus dealing with problems down the road. I think that this is where a lot of landlords get in trouble. They buy the property. I hear people, oh, I'm going to buy this house. Oh, easy, $20,000. I'll rehab it and then I can rent it. And yeah. I have news for them. They can do it for $20,000, but they'll be spending that much every single year after that. So with that being said, we did pretty good with the long-term rentals. We decided to diversify and hedge the risk. So we went into different classes of real estate, different areas, different type of tenants, just to kind of have a healthy mix, so to speak. And plus, I've probably rented maybe more than 500 units in the last 10, 15 years. So I was able to see what really works well for different landlords, what areas are strong, what type of properties, where are the potential problems. And I was also able to see different managerial styles. And I think that the reason why we did not go into being landlords earlier was just the fact that I've seen the good, the bad, and the really bad. And I was like, okay, I guess I was not mentally ready to hop in that game. And then going through different events, meeting a lot of people, kind of focusing on the future, and to some extent, being really financially independent. If anything happens, you still want to have your money machine. So with that being said, little by little, there was a shift in our mentality. And like I said, we went into long-term rentals. For us, I know that different people go after long-term rentals and they want to make a specific percentage or amount per property. And I still believe that even if the Chicago market has a lot of disadvantages, it's a relatively expensive market. So you can do really well per unit. Our criteria is we don't want to make anything less than maybe $600 to $800 per unit per month net after all expenses. We consider that a good long-term rental. Time went on, we added more units to the portfolio, and little by little, we started opening our eyes to short-term rentals. Spoke with a few friends. The idea crossed my mind before that. Had a couple of specific conversations that kind of made me lean a little bit more into them. And then I learned that you have your program. And since we go a few years back, I know that you do really, really well. And that was a determining factor for us to decide and go and take your course. And I really want to highlight that the mentality in this is you never know everything. It's just no matter how successful you become, no matter how many deals you pop, like I've done 700-800 real estate transactions, probably about 80 to 100 rehabbing projects, investment properties, residential, commercial deals. It is very important to stay hungry. So if you can keep that mentality and you can continue learning. There was a period of time where I thought I know it all. And I'm glad that this was not a very, very long period. So we realized that there are always people that will find a better way to do something. And why do we have to reinvent the wheel? We can come to you and we can learn the whole process. So obviously we initially right away signed up for your course. And we believe that was a great idea. So I took it together with my wife. I think it was very beneficial to both of us, where even if I've done so many deals, they are very, very different because I'd like to think that being a real estate broker, being a landlord, being a short-term investor, being a flipper. These are still in the real estate business, but there are subcategories, and each one of those is an independent business. So if you want to be successful at it, you have to learn the ins and outs of the game, and the more you know, the better you'll do. Here's where strategies and seminars or programs really come into play, because they can condense the information for you. What probably took me 10 to 15 years to learn on the real estate side as a broker, if I went through a few really, really good programs, I probably would have learned in a couple of years. So yes, you're paying for the program, but man, it's money well spent. I mean, just the first couple of nuggets that you get can save you thousands and thousands of dollars. So as soon as we sign up for your program, at this point, we know how to run. We don't have to crawl. So as soon as we signed up, we had a couple properties one by one under contract, with the idea that we're going to go and make those Airbnbs.
Yeah. And sorry, if I could just pause you there, because I just want to highlight a couple of things that you've brought up, because it's just been absolute gold for people who may not even understand how much value there is to what you've shared here. Because there's a few themes that I've noticed with you, in terms of hustling or staying committed. I don't like the word hustle because I think it's way overused. And I think people, think that as long as they're miserable, then they're going to be successful. And that's not it. But you stayed committed. You set an intention, for what you wanted as a result of all this work. And then you stayed committed to it, even though your first year was $3,000, of income. So now you're being rewarded for that really well, because all of that is cumulative. All that knowledge, it doesn't go away, so, you've learned all these different aspects. And like you, I fully agree. I learn stuff every single day. You can never know everything, but you've tried all these different facets of real estate. And because of that, it's made you even better at what you're doing now with short-term rentals. And, I'm sure in your brokerage and with long-term rentals and everything that you're doing within real estate. So I think that's one theme. And then also, like you mentioned, that you paid attention to the people that you were working with, when you were doing, you were leasing all these rental properties to, renters, or, working with landlords, and saw what made, good areas, what made good landlords, and you use that knowledge. And so I think that is super important too, that a lot of people don't do. It's nuance. It's not like you can just go out and shoot a scatter shot and you're going to get a deal. It's like, pay attention to what differentiates a good deal from a bad deal, and then go after those characteristics that equate to a much better deal. And I think that kind of leads us into your short-term rentals, because their performance on these is just incredible, but it came as a result of understanding some of these fundamentals, I think.
Yeah. And just a quick plug in before I go back into the short-term rentals. I think that a lot of the people that teach real estate and the different facets of the real estate game, I really think they teach it the wrong way. I actually, or maybe I'm the one that likes to do things in reverse, but I always start backwards. What a lot of people do is they see a property, they think it's a good deal, and they try to go and see how their strategy fits in that property. Where I go back in reverse. And when I say we go back together with my wife in reverse. We already know what areas are good, and we already know the different type of properties in those areas, what we can get from them from the different strategies, whether it's a short-term, whether it's a long-term rental, whether it's a flip, whether it's just for me to sell it as a broker. So we go backwards. We already know the numbers. And now we don't have to be like everybody else looking at hundreds and hundreds of properties. We know which properties fit our strategy. We have a crystal clear focus on the strategy that we want to utilize at the moment. And we are only chasing those particular properties where we already know what we're going to get on the back end. So we start with that knowledge, and then we look for a property that fits that bill, so to speak, instead of finding a property that we try to rearrange the natural way of things to fit our strategy. It never works like that. So to a big extent, doing all these rental deals initially took me a long time to do so many rentals, and you're not rewarded so good. But when you become an expert in rentals, here comes the bigger investors. They start finding you, and you start buying and selling buildings for them. And then you hop into really, really big deals, and you sell multi-unit projects, and you get rewarded on the back end for all these years that you kind of put the sweat equity in. But like you said, absorbing all that knowledge about the market and the different facets of the game gives you an edge over other investors. And once we accumulated all that knowledge, we realized that short-term rentals can be extremely beneficial, probably for us personally, better than anything else we've seen. And that's why we decided to pursue those. So we still combine the short-term rental strategy with other strategies that we have. So I'll give you an example. One of the properties that we bought in the western suburbs of Chicago, we were able to buy it very inexpensively, probably about $150,000. We put $80,000 in it as total rehabbing cost. That takes us to $230,000. I believe that property now can easily sell for anywhere between $360,000 and $380,000. So that gives you an instant $150,000 equity in the property. But we did not go after the equity, which was sufficient enough to consider this a phenomenal deal. We bought it with the idea of having it as a short-term rental. So then it becomes a double dipping, because on one end, you found a really good deal that instantly built about 30-40% equity. And in dollar terms, it's probably a couple of years of salary for most people. Mm-hmm. It's taxed way better. There's so many benefits to that game. I'm sure most of the listeners know about them. But having it as a short-term rental creates a lot of opportunities, because we've seen some very, very strong bookings across, our short-term rentals. And at this point, we believe that a short-term rental, if you position it, and ours are not vocational, ours are situational short-term rentals. I still believe that you can probably make 3 to maybe 4 times the money that you will get from a long-term rental out of one Airbnb. Yeah. So we subscribe to the wisdom of doing more with less. I prefer to have one Airbnb than have 4 long-term rentals. So for every one Airbnb, I believe that you probably have to manage about 4 long-term rentals. Yeah. And I have nothing against the long-term rentals. It's just not that easy to find so many, and then to rehab so many, and then rent so many. And yes, on the back end, there is less management into the long-term rentals. But why do I have to have 40 where I can have 10 and have the same outcome? Yeah. And this is what kind of took us through the Airbnbs.
And you're sitting in one right now. You can see it's beautiful in the background. So you can use it. And also it stays in that condition, which is absolutely stunning, because it's being cleaned a couple times a week. So you don't have to rehab it. Yeah. Yeah.
The maintenance, it's an ongoing maintenance. So it constantly stays in top shape. But the other appeal, just like you said, for us was huge, that we can block it whenever we want to. And we can stay the weekend, or we can just come for one night, or we can throw a party with our friends and family. And one property has a really nice big backyard. The other one has a great location. We can walk to almost everything. So makes our personal life a lot more interesting. No doubt about it. And then it keeps us busy. as well, which is good. We're utilizing a lot of strategies to minimize the amount of time that we put in it. And thanks to you and your program, we've been able to kind of shrink the amount of time that we do this, but in a very professional and automated way. So the Airbnbs are really not taking that much time from our daily lives. We can still maintain the other facets of our business.
Yeah, that's awesome. I told my wife that I really screwed up, that I should have made a requirement for the program that I get to stay for free at least a weekend in everyone's Airbnbs, because they're making these unbelievable properties that are all nicely rehabbed and just gorgeous on Airbnb. So, man, I really screwed that up when I created this program. But
you did well. You did well.
I'm curious. A lot of people ask me, one of the most common questions I think that's Googled around short-term rentals is, where does it work best? And a lot of people think that there's just, a couple locations where this is going to be prime and that it's not going to work anywhere else. And everyone who's gone.
Sorry to cut you off. Our properties are in the middle of nowhere.
Yeah.
I mean, really, they really are.
Yeah. So, I mean, what were you looking for when you determined location, in the suburbs of Chicago? Like what was it that, you were kind of, what were the parameters that you were looking at?
All jokes aside, we chose good locations. There's no doubt about it. We decided that we don't want to do anything in particular in Chicago per se, just because in the city, because of the heavy requirements. And we also live in the suburbs. So we wanted to minimize the amount of time that we spend in traveling. And yes, we do have support team. We have maintenance people, we have cleaning people and all that. But still, this is a business that you have to stay active. And therefore, especially in the beginning, while you're learning the ropes. So for that reason, we decided to stick with the suburbs. And when we decided to stick with the suburbs, we started looking for areas where we believe a lot of people will go to. Obviously, one area like that is around O'Hare, because you have a constant influx of people coming in, people going out, plenty of venues. And we believe that anywhere around there, the Airbnbs are allowed, because a lot of cities have a lot of restrictions. You just have to do your homework. And we believe that if we can find the right property around there, it can be very, very successful. The other property, we just saw a certain appeal for people that might want to get away from the city and want to go in an area where they can go around nature, they can relax a little more. So this was our thinking process there. We still believe that vacation rentals are much stronger as an opportunity. You can do better. You'll have them full all the time. But for us, we realized that even if we do situational rentals, we knew that probably our income is going to be less, but we're also going to have less competition. And that's exactly what happened. So it fit our strategy really, really well. It's not that we don't want to have vacational rentals. We just decided that we're going to learn the ropes on a couple of properties that are relatively close to us, so we can actively manage them, go through maybe a year of active learning, go through all the cycles and all the seasonality. And once we kind of learn it, maybe we can put managerial team to take care of it. As of right now, my wife is the manager. She's taking care of things.
Myra's a rock star.
Yep, she's rocking it. I'm just the one that takes care of the maintenance,
nice.
so to speak. Yep. Yeah. And we have a deal. I fix them, she rents them afterwards. Yeah. So it works really well for both of us.
Nice.
Yep. And so we didn't go the traditional way of thinking, okay, we only need an Airbnb in a vacational place, because we personally have used Airbnbs for a situational reason, like we're visiting friends or we're going to an event or we're going somewhere and we just need a place to crash. And we did realize that there is definitely demand for that. So we did not pursue a vacation rental. We did situational rentals. And like I said, they actually beat our expectations by far. we're very, very happy with what we've been seeing so far.
Nice. Yeah, that's what I always tell people. Anywhere where there's people, there's a need for short-term rentals because, I mean, the vast majority of our rentals it's not technically vacation. Like you said, it's visiting family and they don't want to stay with family.
Yep.
They just want to visit for the holidays, but have their own place. It's weddings, it's funerals, it's work. It's all the reasons that you travel to an area. In any area where there's population, you're going to have that. And even when there's not population, there's still demand because people want to get away from population. So there's so much demand for it everywhere.
I also think there are economical reasons why people choose Airbnb, especially if you have a property that can host more guests at the same time.
Mm-hmm.
Our properties can host anywhere between 10 and 11 people at the same time. And for that reason, if you think about what it will cost you to go in a hotel, even a cheap hotel will be $100-$150 per night, and you can fit more than 2 or 3 people at the same time in that room. So therefore, to get to 11, you need probably about 4 rooms at an average cost of, let's say, $150. Even if it's not an expensive hotel, that's $600 a night. You'll do really, really well, even if you rent that Airbnb for $300 a night.
Yeah.
So times 30 nights. So you're coming at a fraction of the cost of a hotel, allows all the people to stay together if they're a bigger family, or even if they're traveling for business or work, they can stay together, help their, camaraderie, and they can do things together. And people definitely like it.
Yeah. Yeah. So speaking of those nightly rates, so you mentioned you created 6 figures plus of equity in each of your first 2 properties. What does the cash flow project? What do the cash flow projections look like on these?
So we decided to go a little more aggressive on the nightly rate. So most of our nights are anywhere between $300 and $400 a night.
Okay.
And we're projecting. We didn't even go that much with sales numbers. When it comes to overall sales, we decided to go more than anything to focus on net profit, because I can care less about the sales. I just want to see what it nets. So our numbers suggest that, a typical Airbnb can make you a few $1,000s a month net at the end of the month.
Yeah.
At least in the suburbs of Chicago, as long as you can manage it properly. So like I said, to us, anything above $800 a month will be considered a win, because that's what you can do with a long-term rental. Mm-hmm. And that's if you buy it right, if you rehab it right.
Yeah, that's a great long-term rental. Yeah.
That's a great long-term rental. So anything above that, it's a pure profit. And
in terms of net take home. Yeah, this is net take
that's
home,
after all
not 800 in rent, but net take home. Yeah.
That's after all expenses, after taxes, after maintenance, after assessments, after whatever you have, after insurance, if you're paying utilities. So net, just really what goes in your pocket. Mm-hmm. So we believe that you can probably make at least 3 times that on Airbnb.
Yeah. And your bookings already have proven that. I mean, I know you're booked pretty solid for the next 4 months, which is incredible.
I mean, with 4 months, you can get probably, if you're looking at total sales, not just net profit, because it's a little different, but maybe within 4 months, you can do the sales of what you'll typically get from a whole year of that property on a long-term rental. So our numbers indicate that it's roughly about 3 times. So 3 times the sales and probably 3 times the net profit, more or less.
Yeah.
Take it or leave it.
Man. Yeah. And even if, so like this is one that you have, say $230,000 or $250,000 into, and it's worth, 100,000 or so more than that, or 150,000 more than that. So obviously you have a really nice property, but even if you bought a property at 350,000 or close to 400,000 turnkey, and you did this strategy, you're still at mortgage rates today, you're still cash flowing. Say it's not $3,000 a month. Now it's down to $2,500 or even $2,000 a month. That's a phenomenal deal. I mean,
Absolutely.
and you don't have the equity in it, but can you kind of, I think probably the question that's coming up for people here is, how does one go about finding a property that you can put, or create $100,000 worth of equity and several $1,000s per month in cash flow?
Sure. So, like I said, the real estate business is very cyclical, and the way you find deals today is probably good for now and maybe the next 6 months, or at best the next year, and then you got to change the strategy. So over the years, we've tried so many strategies, from direct mail, from cold calling, from networking, from doing joint ventures, from looking on the MLS, from subscribing to different programs that give you access to different kind of properties. We still believe that one of the strongest ways is networking, and you just have to connect with a lot of people, and you have to give them incentives to send those deals to you. So just because I'm a real estate broker doesn't mean that I will not be willing to pay a commission or referral to someone that sends me a deal. Same thing with actively looking on the MLS. One of the deals we found on the MLS, believe it or not.
Wow.
And the other one was through personal connection. Someone told us that property, the owner might be willing to sell, and we chased him for 6 months straight. So he wanted to sell, but was not quite there. And then we stayed persistent. We knew it's a good deal. And then we kept going after it and kept going after it. And probably, I'm sure that there were a few other people that were talking to the same seller, but they were just, they faded away, and we stayed until the end. And one day when we connected with him again, he was ready to go. And I'm like, okay, let's do it today, now. So it was very, very aggressive, very quick. We're ready to go. Finding deals is an art, I believe, but you can increase your chances by talking to more people. Obviously, one strategy is being connected to a lot of real estate brokers. Another strategy is going to different events, and they don't have to be all real estate related. As a matter of fact, it's probably better if they're not, because you're going to be the only real estate person on that event. You can connect with a lot of people. So if you go to, let's say, one event a week and you meet 20 new people, at the end of the month, you just met 80 people. At the end of the year, you met 960 people. I can guarantee you that if every year you meet 1,000 new people, you'll do at least a couple of really good deals, if not more.
Yeah.
So going to events, networking, probably the best way that I know. A little old fashioned, probably you have to put a little more effort. But I gotta tell you, looking at a screen day in and day out is no different than that. You're gonna put the time one way or another. So we think that being personable and knowing people creates residuals, because you can get multiple deals from one person.
Yeah.
And that is very, very important. So try and befriend a lot of people that can find you deals, and definitely when they bring you a deal, make sure that they're happy as well. So this is how we found the deals. Why we decided to remodel these deals is strictly based on our comfort zone. I will not recommend people that are new to the business to take on big rehabs. One of the properties we had to do a very, very heavy rehab, and the other one was in very good shape. So, but the first one, we pretty much had to do everything. I mean, we even opened the walls, insulation, plumbing, electric, HVAC, roof, siding, you name it. We did everything. I mean, we only had the studs on the house.
Wow.
And this can be very overwhelming, and someone that is not very familiar with the process should probably start learning on smaller projects. And once their knowledge and comfort zone expands, can approach this. So why we did a double dipping, so to speak, or a double whammy, is because we have so much background in constructions and rehabbing. So we were able to buy a property where other people were scared to take on it because they knew it's a very, very big project. And once you kind of have to do everything, going through the permits, having the right contractors to do the work. I do have actually my own team, and I GC my own deals. So it's a little different for me. And that's why we kind of went into them. But like you said, ideally, the numbers on Airbnbs are so good that if you can find a property in an area where, especially if the Airbnbs are allowed, it won't matter if you don't build the equity, you'll still do at least 2 times. Let's say that you don't do 3x. If you do 2x, you'll still do very, very well on a property. So with that being said, I'd say that if you want to run with that strategy instead of crawling, you're better off buying properties that are ready or near ready, where with maybe just a few touch-ups here and there and maybe furniture and all that you can kind of get them up to speed. Because even if you save a little bit of money when you buy them and you rehab them and you build some equity, you're still looking at a few months before that property can be operational. In that time, you can be, cashing in thousands of dollars in proceeds every month. So at the end of the day, for some people, it might be about the same if they buy a place that needed more work versus a place that they can get up and running instantly, especially if they time it well, based on, seasonality and all that.
Yeah.
So if you want to buy multiple, there's no way that you can buy, rehab, go through the permitting process, then furnish them and all that. If you're going to do all of it, you'll be doing it one at a time. Mm-hmm. So if you want to have more, I say that, if you find a good property in an area where you believe that the sales are going to be strong, you can just keep getting the new ones. And if you use the same BRRRR strategy, which is typically for long-term rentals, you can use it for short-term rentals as well. You can go and refi them, or you can sit on them for about a year, even if you bought them in very good condition. With the way that the market has been in the last few years, you didn't even have to rehab them. Every single year, the prices go up with 20%. Yeah. So inflation is getting you, is kind of helping investors like us because, even your loans are inflating and therefore you're making money on top of the money that the bank gave you. You borrowed it at 3.5, inflation is at 20. So you're making net 16.5% on other people's money, which is huge.
Yeah.
But you're able to go and refinance within a couple of years, even without doing a rehab. So you can use the BRRRR strategy without really doing the first BRRR. You're just kind of going into the last R, which is refinancing and repeat, and that's pretty much it. Yeah. So again, it really depends on what your strategy is, how quickly you want to move, how many you want to have, and that kind of goes back to what is your plan? What is your goal? Where do you want to get? How far you want to go with this? How much time you want to put? And what is the outcome? So you got to start with why you're doing it. What do you want to achieve? What's your reason for it? And then again, I guess starting in reverse, so.
Yeah, no, it's such a great point that you bring up there, because it's very nuanced. And I don't think people, especially in the beginning, understand the difference between what you're talking about. A lot of people are like, well, yeah, I want all that equity and I want the cash flow. And it's almost like you're combining two different types or two different strategies together here, because you can go out. And that's, again, why it's so important to get clear on those outcomes. Because if you say, my outcome that I want is to get to financial freedom, I want to leave my job as quickly as possible, you can go out and buy 5 vacation rentals turnkey, as long as they're decently cash flowing vacation rentals, which in a lot of places they are, and you can get to financial freedom and you don't have to have a dime of equity. You chose to do deals that would create equity as well. So you're increasing your net worth while you're creating these streams of cash flow. And that was a conscious choice, but your strategy to find those deals now is going to be totally different than somebody else, because I didn't realize in the beginning, you don't just go and look at all the properties and try to convince sellers to sell them to you at a deep discount. Like you have no business doing that, and it doesn't work very well, and you probably piss off a lot of people. What you should do is focus on the 5% of properties that have problems, like you're doing, that need the full gut rehab, where you can get them at a discount because you're actually doing a service for the person who's selling them, because they have this burden that they want to get rid of. And you're willing to take on all the work that's required to do it. So, so that's how you build the equity in. But if you just want the cash flow, then like you said, you can go out and buy these turnkey, and they work really well to create the cash flow. So
I'd even go and say that you don't even need 5 Airbnbs. I'd say that probably most of the people will be financially independent with 2.
Yeah.
I mean, especially if they choose them well and they actively manage them, so they don't offset the management. Obviously, they have to have a little sweat equity. Mm-hmm. You probably substitute your salary with a couple, maybe 3. Yeah. And with that being said, not that difficult to achieve. We were very conservative to begin with, but again, not so much because we also wanted to build equity, is because, like I said, we've used different strategies over the years. So at this point, we're combining strategies. Mm-hmm. So on one side, what we've learned from renting helps us select the areas. What we've learned from flipping help us find those good deals where we can build a lot of equity. And now what we obviously learned from your course on Airbnb is how to do everything. And there's thousands of little nuances. I mean, this business is a whole science. So if you have to learn them one by one, it will take you years. You'll make many mistakes. You're going to leave so much money on the table. It just makes total sense to go get the course. And I don't want this to sound like a sales pitch. Yeah. Your course is
I'll
great.
Pay you afterwards.
Yeah, thank you. Yeah. But since I know who you are as a person, as a business individual, I knew that course is going to be great before I even decided to book it. So it was an instant decision for us. And like I said, you just learn one little thing. I'll give an example. You just learn the smallest thing, just how to furnish the place. I mean, I can tell the listeners that just on furnishing, what I save on furnishing, I can probably buy your course 5 times, maybe 10 times. So with that being said, and if you want to run it as a business, you have to know the ins and outs of the game. You can condense it, you can learn it very, very quick. So courses are definitely the way to go. And from the strategies that we've learned, in flipping, you get those big chunks of money, but you can run for many, many months without income. Versus Airbnb gives you that income. It's almost like the Ubers of the real estate business. You go to work today, at the end of the day, you go home with $200-300. So it's pretty much the same thing. Your house goes on the market today, someone books the night or 2, in 2-3 days, you get the money in your bank account. So you have a delay of maybe 2-3 days, and the money hits your account, which is great as well. Versus obviously long-term rentals, very, very different than that. So having different strategies, you don't even have to have only one strategy. But so far from everything we've tried, we believe that we see the best results in Airbnbs in short-term rentals.
Yeah, and I'm curious how you financed these deals, because that's another big question that comes up.
Okay. Sure. So using my knowledge from the rehabbing years, we decided and we went with you can call it private money, and some people go and borrow hard money. We did quasi, like hard/private money. But in all honesty, it's like hard money loans. So because we had to go and remodel the properties, and we wanted to use the burst strategy on those, knowing that there is so much equity in them, that was the proper strategy for those properties. So we borrowed the money at a higher interest rate. We purchased them. We also financed most of the rehabbing. And then when we were fully done with remodeling the property, we went to a bank and refinanced that loan. We paid off the high interest loan. And now we kind of have them with just a normal refinance loan. We're still able to lock good rates, which was great. So we're not strangers to financing them with hard money or private money, but that was strictly because we needed to do a heavy rehabbing. If I'm buying a turnkey property, right off the bat, I'll just go to a normal bank and try to finance it this way.
I see. Okay. So it's in the long-term financing that you got then, is that an asset-based loan, or is it like a conventional type loan?
It's like a conventional type.
Okay.
It's like afterwards. Initially, the hard money loan was asset-based.
Yeah.
And then after that, we converted it into just a regular normal loan through one of the big, financial institutions. And this way, there are more requirements and more paperwork involved, but the interest rate is lower. Yeah. I'd say that even if the interest rate was higher, it still wouldn't have made a big difference, maybe $200 to $300 more per month in grand scope of things. You kind of have to do what you have to do based on your circumstances. I mean, I've seen this with clients of mine when they're buying their own properties. So some can go FHA, some can go conventional. Some investors have to put 25% down. Someone can go use their own money, then remodel the property a little bit, then wait 6 months to season it, and then refi it the normal way. So everybody's scenario is kind of different, but the more open-minded you are and the more resourceful you are, you can use different strategies for different type of properties depending on the type of deal that you get. So if we were buying turnkey, I wouldn't even think about, having hard money loans, but they definitely can be utilized very, very well.
Yeah. Yeah. And it's funny. You mentioned the long-term financing and the rate not really making that huge of a difference. It's today you hear people say, because rates since the beginning of the year, we're in 2022, they've gone up. And so people are like, oh, the rates have gone up 1.5 points. So I'm going to stop buying or slow down buying vacation rentals. And it's like your cash flow just went from $2,000 on a property to $1,700 and you're going to stop buying. Like that's no longer acceptable
no,
for me. I don't want $1,700 a month. Yeah.
I'm actually really happy because there'll be more deals for people like you and I. Let them stop. Yeah. That's okay. If they don't want to buy them, we'll be buying them. A lot of people don't understand that even 5% interest rate is still so low in grand scope of things historically as well. I also think that a lot of people haven't realized that things have changed. So they still look at the property as the asset and at the loan as the liability, where in the last maybe 13, 14 years, the loan has been the asset and the property is just what's paying that asset. Loans at 3, 4, 5%, where you have inflation hitting 20%, those are huge assets. People are not realizing that you're inflating those loans. You're paying them off much cheaper down the road at a preset rate. So your payment never changes. So by the time you pay them off, you'll be paying off with the purchasing power of that money, you'll be paying them off maybe 3, 4, 5 times cheaper than what you bought them. And not only your money,
3, 4
absolutely,
times
absolutely, you're inflating also the money that the bank gives you. So there's just, it's a great opportunity. So even at 5% or even at 6%, if you find a property that makes the proper cash flow to service that loan, and you have cash flow afterwards, as long as there is positive cash flow, I still consider this a pretty good deal. And you still lock in loans at 5, 6%, where you have inflation running wild, and it's probably going to run wild for the next few years. So right now is still the perfect time to, you're really buying the loans because those loans are, the bank is giving you money actually to borrow from them. I've never heard this anywhere. And I've lived in different places. There is no other place on earth that the bank gives you money to borrow the money from them.
Yeah.
That's exactly what's happening. And just to kind of explain maybe that concept for people to understand. So let's assume that you buy a property for $1 million. And let's say that you buy it as an investor and you have to put 25% down. So you put 250,000 down. And let's say you get it at 5% interest rate. So next year, with the inflation that we've been seeing of around 15, 20%, and that's what we've seen in the last couple of years, prices of real estate have been going up by 15 to 20%. So next year, you're going to have a property that is now worth $1.2 million. And of course, this doesn't go in perpetuity, but all you need is just a few years of inflation like that. Mm-hmm. So now you have a property that is worth 1.2 million, but you only have 250,000 of your own money. So what is your cash on cash return? Well, you put in 250. By the end of the first year, you have $200,000 return because you were able to inflate the 750 that the bank gave you. So you're having about 80% return on your money in 1 year. I don't know many businesses that can do that, and that are on top of that, you're getting the cash flow. On top of that, you're paying you're in a completely different bracket how you pay your taxes through real estate investments still. Yeah. So with that being said, again, focusing only on the interest rate doesn't make sense. You kind of have to look at the big picture. There's so many advantages to having real estate per se, and then utilizing the right strategies, you can double and triple dip. Yeah. So I didn't want it to go that and be that technical, but now that you brought it up, it's not only what you built in as far as equity, it's also the fact that you're inflating a loan that you got at 3.5% with an inflation rate of 20%. So every single year, the money comes back to you inflated, and you're getting a great return. On top of that, you're getting cash flow. And on top of that, if you're able to refi it, you probably even pulled out all of your capital. Mm-hmm. And therefore, you're making money with no money in the property. So at that point, your rate of return is infinity because you don't have any of your own money. So cash on cash is infinity. And there are many, many benefits to do all that. And in particular, once you combine all these strategies, especially with a good Airbnb, you're getting probably the return in 1 year of what people make in 10 or 15 years. Yeah. So you're kind of accelerating the cycle, and it's like playing a video game. How quickly can you get to the next level, and the next level? And, short-term rentals as of yet are still one of the best ways that we found how to play this game. Yeah. And we've played different levels so far. Yeah. So, this one obviously kind of gets you from point A to point Z very, very quickly, if you do it right.
Yeah, I fully agree with that. And yeah, you could tell that you have such a depth of knowledge with this when you explain it that way, because I think, when people are starting off, they don't fully grasp the whole picture. Like you said, you got to zoom out and look strategically at it, and look, tactically at each deal as well, at both. You can't just focus on one or the other, or else you kind of lose out on one aspect. So I appreciate that explanation. I think that's a great place to sort of end this conversation, because I think we could talk for a long time, and I don't want to take up too much of your time, but I really appreciate
I don't like
it.
to talk.
I know you seem very shy and like you're not willing to share at all. So
sure.
No, I really appreciate it. I know the community is really going to appreciate all the advice as well. If somebody is listening to this and they want to reach out to you and maybe talk some more, are you willing to talk to them even more?
Sure, absolutely.
What's the best way to do that?
Probably the best way to do that is find me on Facebook, Instagram, Isaac Danon. I think there's only one of me on Facebook in the United States, and that would be a great way to connect.
Nice. Awesome.
Yep.
Well, thanks again. Go ahead.
Yeah, thank you. If people can get one nugget, because I always try to get one nugget out of every seminar that I take or every event that I go to. A lot of people that at least approach me, they ask me, what is a good deal what should I buy? They always want that hot tip, whether it's a hot tip for just buying a property, rehabbing a property, Airbnb in a property. I believe that I shock most of them by telling them that the best tip I can get them is to get educated. So they have to start with the education to be able to even understand when a good deal comes their way. So instead of me telling you, this is a great deal, do this, do that, and they go based on tips, or they hear a little bit here, a little bit there, I really believe that the best and most important thing is to start with the education, and everything else will fall into place.
Yes. Yeah. I think that's great advice. Awesome. Well, thanks again. And we'll continue to stay in touch, and maybe we'll bring you back on when you have 20 of them, and we'll see how your whole portfolio is doing.
Sounds like a plan. Thanks a lot. Bye. Have a good one.